We are here on this amazing day. Okay everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, we are checking out and marking up GBP USD. Let's take a look what's going on in the market. So back in May of 1993, the market has started off. It started off right into resistance. So the market ran right into, came out of resistance into an area of support. From there, the market pushed up back into area resistance, retesting it not once but twice. It couldn't break, so the market came back down to retest again, try to come down to the support. Wasn't able to, create more momentum in this area, so the market pushed up into new areas of resistance. And we can see a pattern in this area. So I see a double bottom, first leg, second leg, third leg, fourth leg. So this was supposed to have been an area where the market would have retested and then shot up. But it just consolidated right here, bounced up and down a few times. From there, it definitely wasn't this. And then the market pushed back down, broke through the support once, but not once, but twice. Bounced up and down through the support. Created some type of formation down here. So something happened down here. I see a whole bunch of wicks. So it's getting real wicky, showing that the market is losing momentum. From there, the market pushed back up, went back into areas of resistance. So once the market went back to areas of resistance, I can see a formation right here, which is the double bottom. And we know after the double bottom, we get a push up. So here we go, first leg, second leg, third leg, fourth leg, broke through the area of resistance, created new areas of higher highs. From there, so the market did something here, something went on in here, and then the market pushed back up, broke the resistance, created new areas of support, broke back down to the support. Actually, the formation is in here. So there's a formation in here which will be, and you'll see it clear if you go down the time frame, but I'll demonstrate right here. Double bottom, first leg, second leg, third leg, and fourth leg, which is the formation of the double bottom. The retesting happened either here or there, right next to each other, and then we got another push up through that resistance twice, created new areas of higher highs here. With this new area higher highs, we see this long wick to the top, showing that the market is losing momentum. And we got the engulfing red bearish candle that pushed market back down to the area of support. Not just once, but broke through two areas of support, then three areas of support, or I should say four areas of support, because it actually broke this one here too as well. And then the market consolidated back and forth within these two areas of support resistance. Market came back down, created new areas of lower lows. So once the market created new areas of lower lows, and it's the lowest the market has ever been. So once we're in new areas of lower lows, we do know that if the market is in lower lows, it's going to go back to higher highs. If not, it's going to break down and create new levels of lower lows. So this is the area of support right here, which is new areas, lower lows. We had to touch once, it broke up out of it. It came back for a second touch, third touch, fourth touch, retested something in here, push up. And so what I see, at least the last few candles, is the double bottom. And after the double bottom, we get a push up to the top. And go to formation, first leg, second leg, third leg, fourth leg, formation of the W. The retest happened here with this red bearish candle, and then the market pushed up. So after retest, most of the time we see double bottoms. After the retest, we get a push up back to previous areas of high highs, which the market did. Now we got to figure out, is the market going to break this area to go to our next area of resistance. So we're going to clear our screen. We're going to pay attention to the area of price action to see what's going on. So the second thing we're going to focus on is figure out our overall direction, which we did by doing market structure. Market structure showed us that we are in an uptrend so far. So if we come here, we grab our trend line. Okay, so we do know or have an idea that our overall trend is in a uptrend. We are going to look for our SR lines. By doing that, we're going to look for price action. We're going to look over to the left to see if price action is trying to break something, and it is. It's trying to break this peak area here. And let's say the price go up further, which will be the next level, will be this peak here. And let's say if market would go back down, how far would the market go back down? So we go look for price action, look for the next level down, which would be this inverted peak here, which would be this peak here. You can grab this inverted peak here, but there's definitely an area of support at this invert here, or this peak. So we'll take this here. We actually can drag it up a little bit to touch at least these two wicks on the other side here, and it actually respected this one here, so it definitely shows that there's something that's going here. But then there's missed out spot here, so what I would do is probably just put it right to the middle. Perfect. We're going to head down the time frame. We are going to look for more additional SR lines on a lower time frame within our top-down analysis that we will be doing right now. So what we'll be looking for is peaks within our red line working top-down. So this area we have a peak. This area we have a peak. There's one here, also respected from the other side. And let's go bottoms up and let's work on our inverts. So anything above this red line is an invert right here, inverted peak. There's also inverted peak here, so it's something going on here. And matter of fact, I won't even draw extra line. I'll just probably just drag this further up. So what I'm going to do is, let's erase it. So if I come right here, drop that inverted peak there, boom, and it landed perfect. And it's a formation right here. It's definitely a formation. Wasn't able to retest and do what it wanted to do, and you can see it went down. So I feel like there's something going on in here, which it is. So it respects here. So we have another peak here, and the only reason I caught it is due to experience. Also, I can see that I had some extra wicks dropping down here in this area, but when I look over in this area, we have some inverted peaks that I couldn't really see. Okay. So next we're going to look at price action. Let's take a closer look at price action to see what is going on in the market. So we seen what the market was doing in the earlier time frame. Let's see if we can draw it out and see with our eyes here. Okay, so what I see here, the market pushed down. It did a formation, or tried to. So it pushed down, created new areas of lower lows, and from there, here go. This is the first leg, second leg, third leg, fourth leg, and this is where the formation of W happened. The retest was huge, so it could have been any in this area here. So once this market came up and it came back to retest right here, this is, we know most of the time after retest, if the market shows the pattern. What it did, it shows it was bearish and the market pushed right up and it created new areas of high highs, which is currently right here. So we have to see what is going on in here. So what we're going to do is we're going to see if we can find a pattern. So the way we're going to do that is just clear the drawings off our screen. And to find patterns in the market, what you're going to do is you're going to go to Google. You'll be typing in Forex pattern cheat sheets on YouTube, and that will show you what is going on in the market, as in any patterns for you to take entry. So once you discover what patterns that it may be doing, and what we can do is we can grab our highest high. We're going to put a rectangle on our highest high, and we're going to take it down to the area of our lowest low. Okay? And we do not know that we are in an uptrend. We may need to expand our trend line later on because it is definitely too tight on this time frame here. So if we slide this over just a little bit, and all we have to do is wait. Whatever's going to happen, whatever the market's going to do, the pattern's going to form here. So anything can form here. It can be a push up, it could be a push back down, it could form some type of double bottom with another push up. The retest can happen here, and we can have the other push up from all the way up to the top side. It can do any other type of pattern, but what we have to do is stay focused on this area here, and this is where it becomes a waiting game, and the pattern will reveal itself, and you can take it for the trade, and that would be an amazing move. So realistically, the trade isn't there because there's no pattern. If we see the pattern, we can take the trade. So for now, what we can do is we're going to grab our long position. Let's say we did find entry in this area of our SR line, or this is what price action is, and let's say we take it to our next SR line, which one be here, will be the next breakout. Let's say we take it for there, and then just pull back, make this a lot tighter. See if I go down. Let me see if I go down the time frame to see something. It could be more in here. Oh, there is more. Oh, I jumped the gun too fast. So recap. So we did. That's why I did say, if we grab the highest high, you grab the lowest low. I mean, it was huge. But if you grab the highest high, you grab the lowest low, you will see the formation inside here. And when I went down the time frame, we found the formation. It happened. Now, if you don't see what's going on, I'm going to identify what's going on. The formation was trying to form is the double bottom. And here it goes. This is the first leg. This is the second leg. This is the third leg. It's trying to form that fourth leg. And the retest can happen somewhere in this area. And then we'll have that push up to the top side. But that's how it's looking so far. It may not do that. It can do something like this. So that's if the market is going to go up. If it was going to go, so it's three ways the market can go: up, down, or sideways. That was up. If the market is going to go sideways, it can consolidate just like this, just back and forth until it finally reaches close to our trend line to break further up. If not, another option the market can do, it came out of lower lows to higher highs, came back down, retested something in this area, trying to come up to higher highs, may not be able to make it, so we can see a pattern may come and the market could just push back down. And what we have here, we have 1, 2, which would be the double top. So we see a double top that the market is going down, and it can, reach our lower lows and create a further drop. If not, it can change patterns and go back up. We could probably catch a pattern here, and it'll go close to our trend line. We'll catch it up to the upside. But at the end of the day, the market still haven't fully identified itself. We can see that the market may be forming a formation of a W, not 100% sure. All we got to do is just wait on the time frame to see what's going on. So what I was saying earlier when we was on the earlier time frame, if we grab our long position, we'll place it on where price action is, and we're going to grab our next SR line. But let's grab our next break through our SR line currently right now, and then we're going to grab our, let's say if market goes back to the low, we're going to figure out how far the market will and can go back. So ideally, this is not, would be a trade at all. This is just to give you an idea on how to set your TPs and stop losses. So once we see a pattern on the higher time frames, we'll take the trade, and that will give us a total estimate of 196 to the high. And like I said, this is not exact because it's not realistic. We don't see the pattern, but just to put some numbers on the screen to give you an idea of what can happen, because if price does take entry here, do take the pattern, it can give us 196. Let's say if price moved up a little more, it'll only be what, 186, 176, 166. Still good trades. If the market goes back down, we catch the pattern here and it goes back up, that would give us additional trades, would be 205, 250, 215, and we'll take it all the way up to the TP. If not, then we'll just be waiting. So that would give us a TP of 196 and a stop loss of 39 pips, which is both estimates, which is an amazing trade of 196 to the top, 39 for the low. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you